morning. Welcome to 3 Minutes on Markets and Money. Let's talk about the return of meme stocks. But first, take a look at the markets here. Again, as we've talked about over the last couple of days, nice rally off the 40-day moving average. Very consistent with what we've seen here over the last several months. Volume, though, dropping like a rock here. Again, this is just a function that buyers are not really in the markets. This is mostly just sellers not wanting to sell. And so what buyers come into the markets, dragging up the price from sellers. That's what's happening. However, after we get to these new highs, which we did yesterday, market kind of stagnates here a bit, really having trouble making strong advances, just kind of stair-stepping up very slightly each month as we go along. Again, kind of an upward grind, nothing wrong with that. But again, very similar to what we saw in 2017, where we had a year where the market ground higher with very low volatility, and low volatility ultimately begets higher volatility. The only question is when and what causes it. Let's go to what has been showing some signs of volatility, and that's been meme stocks as of yesterday. Again, take a look at GameStop as an example of a meme stock here. Not really doing much after the last spike, really just kind of giving up most of its gains. Yesterday, for some reason, just found signs of life as really investors, retail investors, turning away from Bitcoin and cryptocurrencies after getting that back up to 50,000. They said, done with that. Let's go back into meme stocks, running GameStop up yesterday. Same thing, of course, with AMC, the movie theater. Again, this company is something that cannot generate real revenue right now. We're not seeing people really return to theaters en masse, but the valuation here for this company really exorbitant here. Big day yesterday, up about 24% for the markets yesterday on GameStop. Again, very overbought here. And again, this is likely to be short-lived, but pay attention to that. Taking a look at Robinhood, of course, which is the new poster child of meme stocks. After IPOing, gave up vast majority of the gain following the IPO, did bounce a little bit yesterday here along with the other meme stocks. Again, this is just really the sign of this rotational speculation in the markets. Retail investors looking for an opportunity, looking for things that are very short, trading these for small gains now, not seeing these types of runs that we saw earlier this year. And that's just really a function that, A, we're seeing volumes really dry up here a lot. We're starting to see less retail momentum in the markets, and also confidence in the markets is beginning to wane here. And really, that's just been a function when we go back to looking at the market itself. It's just a function that really there's not been a lot of excitement or fireworks in the markets. It's been pretty dull, actually. Yes, markets are grinding their way higher, but it's just been this very slow advance. Lots of rotation in the markets. You know, one day it's tech, one day it's healthcare, next day it's energy. Just a lot of rotation, a big dispersion of performance across the market itself. Nothing wrong with that, but again, also a sign that you normally see in a later stage advance, and one where you've had a very long period without a correction. Just all the things that kind of add up to potentially seeing a bigger correction in the markets at some point. Don't know when or what causes it. The Federal Reserve, most likely the catalyst here over the next couple of days, depending on what they say. And we'll talk more about that specifically tomorrow on the next edition of 3 Minutes of Markets and Money. We'll see you then.